Just taking a look at the fixed income space and starting off on the currency side of things first, looking at the local unit, the Naira expected to weaken further next week, possibly hitting its lowest in a year if it goes above 155 to the dollar. Run us through the major drivers behind the trending weak or lower that we're seeing right now.
Yeah, I'll touch on two key issues. The first being lift of ban on some commodities by the government last month. What we're beginning to see is people taking positions and then ordering some of these things. It have to do more with clothing, that's textiles, and then furnitures, vehicles. Of course, when you place your orders now, we expect this commodities to come in for the first quarter of next year. And then this has caused an increase in dollar demand. And then the second issue really is the Yuletide season, and then the CBN that's in charge of selling dollars. That's foreign exchange on via the wholesale Dutch auction system has shut down for the year. So what they've done is to sell a huge chunk of about $800 million. This is supposed to cover for this week's and next week's demand. What this has done really is that banks and other FX dealers have continued to take long positions to have enough FX supplies to cater for their customer demands all through the Yuletide season till resumption of the next WDAS. That would be January 5th next year.
There seems to be a fair share of speculation about, though, that the state-run energy firm NNPC is going to be selling dollars in the next few days, which could provide some relief to the local currency. Just how much of a cushion is being anticipated from that end?
Yes, it's the probability. It's not very sure. But if NNPC decides to sell, it may also decide to sell an amount that may include an amount they would have sold ordinarily for this week's demand, for the month's demand. If they do sell, it would probably just marginally bring down the price at which Naira trades against the dollar on the secondary market, that's in the interbank. Last week Friday it was 151 Naira to a dollar, but right now, as I speak with you, it's about 154.50. That's a decline of about 3 Naira 50 kobo in the value of the Naira. If NNPC comes in, except if they sell double the amount they would do normally of about 300 million, and that I'm looking at about $500–600 million. If they do that, it would prune down the exchange rate right now. As against the way it's trading right now in the interbank market.
Well, Bankole, on the fixed income space, results for the last bond issue have just been released. Give us an update on how that's fared.
Okay, what has happened in the fixed income auction this month is that for 3 years we've had the marginal increase from 11% stop rate for 3 years bonds from 11% to 12%. On the 5 years, we've not had the 5 years be issued in the last 2 months, but last time it was issued, the bond of such category was about 3.2%, and then this month they've come out with 12%. For the 20 years, the stop rates have been maintained at what it was last month of about 14.5%. These are still very good percentages for investors who probably want to come in to get long on this government instrument. Well, but I'll talk on the 5 years fixed income instrument. That's the 5-year bonds. It fell short of expectations. People expected yields to go above 13%. So what we're seeing is that for those who had positions to cover that couldn't cover it in the primaries, the secondary market reacted, and then prices went up further, and then yields dropped seriously. There was more activities on 5 years.
Well, the bond markets have seen a share bit of volatility this year, where we started strong in terms of prices with yields down, and where we've now started to see an inverse of that playing out. Where to from here in your books as we head into 2011?
Okay, I'll give a brief recap of what happened. In the second half of the year, at the beginning, by July, August, it became very obvious that the government required a lot of capital to, of course, continue to bankroll the rescued banks, and then fund agriculture, SMEs, elections, and then other capital projects. So what happened was that the government increased its volume required from about 20 billion per tranche for 3 years, 5 years, and 20 years bond auction, and then investors, primary dealers simply cashed in on that opportunity as seen. We started quoting higher and then yields went up. Right now, what we're beginning to see is that in the last 2 months, that for November and December, the government reduced volume issued. This has helped cap yields to what they are right now. It's not gone up further, and then it's not dropped significantly, but it helped cap yields at what they were last month.